Here we go, everybody. We have Trade Desk TTD. They report earnings on 2/15 at 5:30 a.m. Pacific Standard Time. Identifying breakouts. Okay, that was a nice breakout. Then we have the fade to the low, and we shoot right back up here on the 3-minute right now above $50. Now, what we did do is Trade Desk has this leg right here. It does have a way of trading. It had come down, but it does get healthy breakouts like it did there. And it's been in a very defined range at resistance at this breaking point, this trend line right here. This is where the breakdown extension was to the lows, everybody. Then we came and we tested, and we had an ascending base up to the highs. We fade, we rally right back. They fade it. This high, even though it's a low, this low is much higher. Now, we don't know what they're going to report. But, hey, it's earnings season, and everything that missed earnings, they ran them straight up. That's how the earnings season has been. So the other part of the breakout trade is the options. We bought the $48 puts, and we have two of those for our friend. And we own the $48 calls for February 24th. They're at 480 by 490. We were the low of the day, and we do have 4 contracts on the February 24th, as you see. Now, we paid the low of the day over here, and we did. So one of our new students is learning how to do this, just like you can sign up for the free 5-day trial, learn how to trade earnings season. He's predicted the downside with the $48 put. That would expire Friday. He's got a February 24th call option, the $48 calls, okay? And the low of the day was me. That entry was $3.60. Yeah, it was. And that trade history is right here. Okay, we bought it on the lows of the day, right there, 360. That's the low of that call option, period. No matter how you slice and dice it. Okay, and the put options were the low of the day on that. That is 238 by 250. Okay, and they can undercut it. They undercut it once, but not by much. And that's the February 17th. And this is live preview going into the closing bell with that breakout on Trade Desk. That $1.45 is a healthy breakout. Now, if they can deliver a good report amongst all of this slowdown, then this thing can really pop, and those 4 contracts could go up to $8.50, and they could. Now, they're not taking any premium out of the $48 put as we go into the close, everybody. All right. And you can see it, it's above $50 right now, and that it is. And so that is the trade preview. And we showed the chart. These are the options as well. You've seen that entry. This is the February 17th. This is the $48 put option. Hopefully you're listening. The low is me. Okay, I got hit on both ends that way. And this is live market hours. There's no pretending about it. You can believe what you see. But once again, part of risk management, even though the way earnings have been and taking bad news is good news across the board, if they beat and deliver and their client base is growing, then we'll find out tomorrow morning at 5:30. And so the lesson learned is how to hedge the position, how to trade the breakout. You can see the breakout right here on the 3-minute, and that is the breakout. And it's coming up now again to test that resistance going into the close. Learn how to trade smart. Learn how to do it now. Don't get hooked. That's why you got at least 2 put options on a trade to protect at least some of the money and then trade around it and do whatever you have to do on the opening bell tomorrow morning. Concluding the earnings preview on the 3-minute breakout. This was a beautiful breakout. Okay, and you make money going up and you make money on the breakdown. Look at that. It can break down and it can rally. And you can see the ascending base. If I take it all the way right up to here, now this is chart pattern only. So tomorrow when they report, we're going to find out if we can trade up above that high. But most importantly, if you go back here on it and you go on an hourly chart, what we need to see happen on an hourly is that the hourly takes out these highs over here. This is the hourly right there. Across the board, that was triple top. You had a big reversal there. Okay, I don't know what caused that, but something did. And that was on 2/9. Because they're reporting earnings, they like to make them go down, and then they like to buy them. And that's been the pattern. And the breakout is still happening right here on an hourly bar. Okay, so if you go back to the 3-minute bar, then you have it. And you have it the way you need to identify it. And by identifying a breakout, you could cash in. You don't have to hold it into the earnings. But let's take a look one more time into the close. All right, our $48 puts are at 235, so we're losing 3 cents. That's all. Okay, so they're not stealing any premium out of these puts right here. They're 235 by 247, and the stock broke out, going higher. And this is live in the market. So you have the option at $5, and you bought this on the low of the day. And I showed that in the order details, didn't I? Okay, so once again, step it up. Do you want to get paid, or do you want to sit around? Do you want to manage risk? Do you want to get on the other side of your gains? You have to. Yeah, so what if they go to zero? If we get a good pop on trade desk and these go up to $8.50, well, on 4 contracts, that would be a $2,000 gain if it did that. We don't know, but it could from here on these calls. And if they do miss, is how does the stock react to that and bounce off support level? And then we'll get another, if we have to buy more puts on it, then we would.